Financial management. Financial management is concerned with forecasting, planning, organizing, directing, and controlling of the firm's financial resources in order to achieve the financial objectives of the firm. These are the evolution of financial management: traditional phase, transitional phase, and modern phase. Years were 1900 to 1940. Transitional phase was from 1940 to 1950, and modern phase is 1950 onwards. Company so event based non-regular activities is my incorporation used to be the part of this issue of capital expansion, diversification, mergers and acquisition, winding up and problems where liquidity problem, day to day cash management problems, budgeting and of funds problem. Then came then this regular activities, day to day activity not event based, so there these problems were resolved. Next was modern phase, where regular activity and day to day activity, today modern day to day activity and not even based, plus economic theories were developed and these problems were not there. Next comes the objectives of financial management: maximization of wealth, maximization of profit maximization is a secondary objective of financial management. Short term goal objective to increase profits, easy to calculate, less time consuming to calculate. Next is maximization of profit. The year wealth maximization is the objective, primary objective of financial management. Long term goal objective is to increase the market value of the firm's market value of shares, not easy to calculate, very more time consuming to calculate. Your maximization of wealth, this objective is ambiguous as profits may be interpreted as the gross profit and not profit after tax, or net profit, or profit before interest and tax, or percentage of profit on the sales or capital employed. This ignores the risk and uncertainties. Next, this wealth maximization is not ambiguous as it considers expected future costs and benefits and eventually expected future cash flows and time value of money. No clear relationship between value and future cash flows. It is a subjective variable and considered as risky and uncertainty. Biggest demerit of wealth maximization: it offers no clear relationship between the financial management decision and the marketplace price per share. No clear it gives no clear relationship between financial management decisions and market price per share. It is more time consuming, complex, subjective judgment, and management anxiety, frustration. Financial management is concerned with financing, investing, distributing earnings amongst the owners and managing asset to accomplish the overcome the overall goals of the business enterprise. Primarily the objective of maximizing shareholders wealth. Business organization of firm or company can be viewed as a pool of funds which are procured by it from various sources. Financial sources available to company: period, long term and short term. There are two kinds of period: long term and short term. Then ownership: owned capital, equity capital, preferential capital, retained earnings, etc. ये होता है long term में. And the sources of generation are internal sources or example retained earnings. Then short term financial sources short period के लिए मिलता है: borrowed capital, debentures, public deposits, loans, etc. And sources of generation are external sources, example equity share capital, preferential capital, debentures, etc. Then each long term source of finance carries a cost depending on the risk borne by the by finance providers. The funds borrowed by the firm must be utilized, invested in a proper manner such that the firm is able to maximize its shareholders wealth. Primary objective and maximization of profits is the secondary objective. Next, this chapter of this chapter of this was the basic chapter which is completed right now. I summarized the notes. Next is leverage. The word leverage is derived from the word lever. A lever is an instrument used to lift heavy objects. Dictionary meaning of the term leverage refers to an increased means of accomplishing some purpose. In financial management, leverage is the use of various fixed cost assets and fixed cost capital such as debtors and preference share capital to increase the returns from its equity shareholders. Risk is operating risk and business risk, and there are financial risk. Two types of risk are there: operating risk and business risk, and financial risk. So operating and business risk is measured by computing degree of operating leverage, and financial risk is measured by computing degree of financial leverage. Then comes degree of operating leverage is contribution upon EBIT. Degree of financial leverage is EBIT upon EBT. Only long term debt and equity, not no preference share capital is will be involved in this. Then degree of combined leverage, here it is contribution upon EBT or degree of total leverage. Degree of combined leverage is also known as degree of total leverage. Only long term debt and equity but no preference share capital, or degree of operating leverage into degree of financial leverage is equals to the degree of operating leverage is contribution upon EBIT, financial leverage is EBIT upon EBT, EBIT and EBIT got cancelled. So degree of combined leverage or DTL, which is degree of total leverage, will be equal to contribution upon EBT, contribution upon EBT. Next, there's this example, P limited Q limited का example है. Degree of operating leverage, degree of combined leverage, degree of financial leverage is found out over here. Next, there's a question which is question number 1. Let's see what it is. So the question is, which says the following information is available in respect to the two firms P limited and Q limited, and here there's a chart which gives the sales less variable cost, contribution, fixed cost, EBIT, less interest, then profit before tax. So this chart is already given in the question. You are required to just calculate the different leverages for both the firms and also calculate on their relative risk proposition. So it has told us to calculate DOL, DFL and DCL. So DOL is contribution upon EBIT, which you can see over here, contribution upon EBIT. So the values were given in the question for P limited and Q limited. Then the DFL is EBIT upon EBT. Again, this was given in the question. I just need to write this and divide it. Then DCL is contribution upon EBT. So this is these values were also mentioned there. So comment is, though both the firms are exposed to the same level of financial risk, however, since operating risk of Q limited is higher than than that of P limited, operating risk of Q limited is higher than that of P limited, hence its overall combined risk is higher than that of P limited. Next is question number 2, which is again XYZ. The question is XYZ. This is an advanced problem, that was a basic problem. XYZ and company has 3 financial plans before it: plan 1 and plan 2 and plan 3. Calculate the operating and financial leverage for the firm on the basis of the following information, and also find out the highest and the lowest value of the combined leverage. So here it was selling price per unit, variable costs is given, fixed cost situation A B C में दिया हुआ है. Then capital structures are also given. Equity capital का plan 1 plan 2 plan 3 है. Debt का भी plan 1 plan 2 plan 3 है. There is 12% debt. So what I need to find out is, see over here, यहाँ पे कॉलम बनाएंगे computation of degree of operating leverage करके. Here a particular situation A, situation B, situation C करेंगे. Contribution is sales minus variable cost. So 800 units the total, and sales price was given 15 and variable cost 10. So sales number of units into sale price minus variable cost, variable price, which is equals to 15 minus 10, and fixed cost less करेंगे तो EBIT आएगा. So degree of operating leverage is contribution upon EBIT. Next see over here, contribution निकाला हुआ है for situation A, situation B and situation C. तीनों ही situations में एक ही है आएगा contribution. Then less करेंगे fixed cost is different in all the situations as I told. Situation A, situation B, situation C का fixed cost दिया हुआ है. तो situation A का 1000 था, B का 2000 था, C का 3000 था. तो माइनस करने से आ गया EBIT. डिग्री ऑफ ऑपरेटिंग लेवरेज इज कॉन्ट्रीब्यूशन अपॉन EBIT. दिस वाज अ कॉन्ट्रीब्यूशन अपॉन EBIT. सबका निकल गया एंड आई विल फाइंड आउट डिवाइड करके. देन कंप्यूटेशन ऑफ डिग्री ऑफ फाइनेंशियल लेवरेज. दिस वाज द कंप्यूटेशन ऑफ डिग्री ऑफ ऑपरेटिंग लेवरेज. दिस वाज कंप्यूटेशन ऑफ डिग्री ऑफ ऑपरेटिंग लेवरेज. देन डिग्री ऑफ फाइनेंशियल लेवरेज एंड डिग्री ऑफ कंबाइंड लेवरेज भी निकालना है. सो डिग्री ऑफ फाइनेंशियल लेवरेज ऐसे निकालेंगे। सिचुएशन है, सिचुएशन भी सिचुएशन सी करना ही पड़ेगा। EBIT तो पता है, EBIT ऑलरेडी निकाल लिए थे यहाँ पे, तो वैसे ही प्लान 1 प्लान 2 प्लान 3 के हिसाब से अब बनाना पड़ेगा यहाँ पे। तो EBIT इज़ वी हैड ऑलरेडी फाउंड आउट द EBIT 3000 2000 1000 लेस इंटरेस्ट करेंगे तो इंटरेस्ट इज़ 12%, डेट का इंटरेस्ट दिया हुआ है ऑलरेडी 5000 2500 एंड वेट प्लान 1 प्लान 2 प्लान 3 के हिसाब से। तो प्लान 1 में इंटरेस्ट एट द रेट ऑफ 12%, तो 5000 का 12% कितना होता है? 5000 का 12% इज़ 600 से प्लान 1 में, एंड 2500 का 12% इज़ 300 एंड 7500 का 12% इज़ 900। ओके, तो ये सिचुएशन ए, सिचुएशन बी, सिचुएशन सी, तीनों में वैसे होगा। फिर EBT आ जाएगा। देन DFL का फॉर्मूला ही होता है EBIT अपॉन EBT, तो जस्ट आई विल पुट ऑन द वैल्यूज एंड विल डिवाइड इट। सही से करना है। एंड टू जस्ट टू फोकस वन थिंग अबाउट ओवर हियर इज 3 फिगर्स तक, पॉइंट के बाद 3 फिगर्स तक लिख रहे हैं। डिग्री ऑफ कंबाइंड लेवरेज, डिग्री ऑफ फाइनेंशियल लेवरेज इंटू डिग्री ऑफ ऑपरेटिंग लेवरेज। तो इतना मेहनत क्यों करना है, डिग्री ऑफ ऑपरेटिंग लेवरेज निकाल ही रखे हैं, डिग्री ऑफ फाइनेंशियल लेवरेज निकल गया है। बस मल्टीप्लाई करके आंसर निकालना है। हाईएस्ट डिग्री ऑफ कंबाइंड लेवरेज इज कंबाइंड लेवरेज जो हाईएस्ट है इज इन सिचुएशन ए, प्लान 2 में डिग्री ऑफ कंबाइंड लेवरेज सबसे ज़्यादा है। डिग्री ऑफ कंबाइंड लेवरेज सिचुएशन सी प्लान 3 में सबसे हाईएस्ट डिग्री ऑफ कंबाइंड लेवरेज सिचुएशन है प्लान 2, सिचुएशन सी प्लान 3, सिचुएशन सी प्लान 3, सिचुएशन ए प्लान 2 में सबसे कम था एंड उसमें सबसे ज़्यादा है। तो दिस इज लोएस्ट degree of combined leverage. This is done. Then there are some important ratios which we'll see in the second video.